Good morning for Friday, February 21st, and there's three markets that I want to look at with you today. The first one is the US dollar, Canadian dollar forex currency pair that I pointed out a few days ago. If you recall, the buy was right when the market took out this high right here. We've had a nice run to the upside. Definitely trying to retest these highs right in here. Need to be taken. If you took this trade, there's no doubt you need to be taking something off on this retest of this high right now. So anything can happen. You would definitely want to bring your stops up so you're locking in at least to below the low of yesterday. The low of yesterday, 1.10596. That stop needs to be brought up to that level. But again, the market is retesting these highs, so there's no doubt you should have taken off at least 60 to 70% of your trade. I mean, this is a nice trade, right? The market pulled back to beautiful support, 50 exponential moving average, while taking out the high of this inside pattern. All the while, the market was consolidating greatly here. So that's a nice trade here. Again, the trade ORMP that we pointed out a few days back, the market really hasn't gone anywhere. The market's pretty much kind of like drifting a little lower, but look, got a pretty interesting pattern here, a potentially explosive pattern to the upside. As you can see, I drew a trend line through these lows, right, and then a horizontal across from left to right from this low over here. So the significant levels here is if the market starts penetrating down through $13.86, you really won't want this trade anymore, okay? On the other hand, if the market's able to break up through yesterday's high of $14.80, then at that point you would have a clear break up through this down trend line right here, okay? So we need to see a pop up through that trend line to the upside, and if you can get that, I think the stock will continue moving higher. But for now, we're definitely in a holding pattern. The volatility has definitely shrunk. This market is definitely contracted. So we're looking for a pop to see if we can, rally up through this line right in here. And then American Express did in fact pop up through this high and then turned around intraday when the market reversed here on the 19th, 2 days ago, but the market was never able to take out these lows right in here. We're holding, so we'll see if the American Express can move higher. If we start taking out these lows in here, you won't want this anymore. Okay, we put that to bed. So we're still looking for a move to the upside, unless of course these lows can be penetrated to the downside. Again, we had a beautiful trade. If you remember last week, we bought the call. That call almost doubled in price, took the trade off right in here, and the market is merely gaining steam or just resting before it reverses. I don't know what it's doing, but it's definitely doing nothing. If we start breaking up, then you could expect the market to come back up, test this high, potentially challenge those highs. But this has to do with the overall market as well, right? The overall market, we want the market to move higher, and it'll obviously take American Express higher as well. So hope that helps. Have a great weekend, and I'll be back with you on Monday. Bye for now.